Welcome to Stock Talk with Nico Criticos. Today, as you can see, we're going to be filming this video in the car, and we are on the go, but we are still going to do some analysis for Bank of America stock. So, if we look at the stock chart here, we're going to see it is at $28 a share, and it recently had a big drop ever since the news about the whole banking crisis came out. As soon as that happened, I immediately started buying up shares. I have 80 shares at $28 a share, so I'm happy to be a buyer of this company. If we go down, break down my checklist here, we're going to see that their revenue and their net income has not been super consistent, but good enough to where I would consider it a growing company, right? So in the last couple of years, you can see they're growing revenue at 1 or 2%, nothing huge, but that's to be expected. That's what the banking industry is typically growing at. If we look at net income, they're actually outpacing by quite a bit. In the last 5 years, they've done 8% income growth on average. In the last 10 years, it's been 20%. So they are doing a pretty decent job there. Then we're going to take a look at the price to earnings ratio. This is one of the best parts of this because if we look at their PE ratio, we're going to see it's trading at a PE of about an 8 right now. Here is the last 9 years or so of where this stock normally trades on a price to earnings basis. As you can see, it's been as high as 23, it's been as low as 8, and right now we're sitting at 8 or a 9. But we are typically right around this 8 to 15 range, right? So for this company to trade at 10 or 12 times sale or 10 or 12 times earnings is to be expected. That's why I like this. I think it's trading at historical lows, and that's a good reason to buy. Number 4, I would consider this company to be maybe not so much innovative, but definitely have a moat because this is one of the big banks where they would be backstopped by the government. They would be backstopped by the feds. So there's less to worry about because they are so important to the US economy. The feds would backstop to prevent a financial crisis. So there is some promise there. Now, if we're looking at liquidity ratios, we're looking to see right now the banking crisis issue is due to people wanting to get their money out of banks and the banks not having it because banks don't carry all your deposits in cash. They invest all that money. That's how they make money. And so a bank like this is, I believe they are only carrying around 10% or 9% of the money. SVB, Silicon Valley Bank, was carrying about 7%. So Bank of America is not far away from that. Other competitors like JP Morgan Chase and Citi are sitting at above 20% cash. So that is a minor concern, but once again, I think they would be backstopped, so I'm not super concerned about that. Return, let's see, growing industry, how I said it's the banking industry is expected to grow at 2%. Return on invested capital, this was one of the only disappointing metrics on here. Not by a ton, it's not that bad. Where is it? It's right here. And what you're going to see is right now we're sitting at about 4.5%, 5%. It's always been under 6%. It hasn't really gone above 7. Therefore, I'm not going to consider that a respectable number. Equity, if we take a look at their equity, this is also a very bullish sign. We're looking at equity of $273 billion. Well, guess what? The company is only trading at a market cap of $228 billion. So that looks really good to me. That's what I like to see there. Then we're going to scroll down. We're going to see that their market cap, how I just said, it's way over 100%, or their equity is over 100% of the market cap. Share count decreasing is looking very nice here. We're going to see it's been decreasing by 2 to 3 to 4% the last decade or so. So that's going to get a check. Then we're looking at our assets minus goodwill, double the liabilities. No, unfortunately not. But how you saw their balance sheet is pretty nice right now. Now, the other thing to take into consideration, not only with this bank, but with other banks, is what's also leading to the banking crisis is not just the fact that people are taking their money out, but also because these banks invested that money into long duration assets like treasury bonds. And the problem with that is interest rates went up after they bought those bonds, which means now you can buy a bond. Now those bonds are that they bought for a 2% yield or 1% yield, whatever they bought. Now you can get those bonds for a 5% yield. That same type of treasury bond is now going to yield you a 5% yield. So those 2%, 1 or 2% bonds are gonna adapt to that, and they're gonna drop in price. So that way they're gonna also be a 5% yield. So that's why you will hear a lot about these banks having huge unrealized losses. And yes, that's a concern, but one, it's not permanent. So the bonds will mature and they'll get their money back, or in under a year, I say 9 months from now or so, 9 months around that time, the Fed's going to cut interest rates. And when that happens, that will also fix the problem, because then those yields will go down and the bond values will go back up. Profit margin over 10%. Well, we are looking here at very nice profit margins of 29, 36, 21, 30, 31, all super high profit margins. That's very nice. Cash is sitting at, it says it's sitting at $500 million. So I don't know if that's something, see, it says cash equivalents, and federal funds sold. So they probably don't have a $500 billion in cash. It's probably through another metric, or that's probably stuff, money that's somebody else's, but it's still strong. Let's see if we can, let's see here. Yeah, there we go. Cash and due from banks. So they're sitting at 30 billion, which is more than they do in net income, I believe. Yeah, that should be more than what they do in net income. We're looking at average net income of, oh, maybe not. They're doing 27, 31. They're doing over $30 billion in net income. It's right around their cash. That's fine. That's nothing wrong with that. Healthy dividend, yes. Mainly looking here for a payout ratio under 75%. Their payout ratio is only 27 with a 3% dividend, and that's going to get a check. The company is definitely over 20 years old. We're looking at a score of 12 out of 14. That's why I would consider this a buy. And yeah, pretty much we're looking at a big bank. Keep in mind too, this is Warren Buffett's second biggest position. Okay, there's lots of hedge fund managers and billionaires that have been buying this stock for the last 6 months. Warren Buffett, I believe, has $35 billion invested into this company, and it's been a big position for a very long time. So I like the sound of that. And it's a big bank. It's got a lot of backing behind it. It's very important to the U.S. economy, and it's trading at a P ratio of an 8 right now. So this looks like a good sign to me. The balance sheet looks good, except for the fact that, yes, they do have those unrealized losses on those bonds. I understand that. The liquidity ratio of 9 or 10% is not fantastic, but it's good enough. It's good enough for now. So that is what I'm looking at for Bank of America stock. Thank you for watching, and I will see you guys in the next video.